What's going on, guys, and welcome back to another video. So in today's video we're going to talk about how to diversify your own portfolio and the importance of diversification, especially in these current volatile times. We will discuss what diversification actually is. We will go through a few important quotes on diversification. We will discuss the different sectors in the market, and we will even look at my own portfolio to see how I am diversified. We will talk about you can be over diversified and what the best number of stocks, in my opinion, are, and there isn't really any proper number, but in my own opinion. And we will also talk about the advantages and disadvantages of diversification. And as always, if you're new around here, please consider subscribing to this channel, as we're currently on 281 subscribers and our next goal is 300. So with that being said, let's dive right into today's video. Firstly, let's talk about what diversification actually is. So diversification is a technique that reduces risk by allocating investments among various financial instruments, industries, and other categories. It aims to maximize returns by investing in different areas that would react differently to the same event. There has been a lot said about investing diversification over the years, and such people as Warren Buffett seem to be against diversification, as he's quoted, "Diversification is protection against ignorance. It makes little sense if you know what you are doing." And that is the point, but you've got to realise as well that probably 99.9% of investors generally do not know the ins and outs of a market. So you've got to realise, people like you and I, that you have to accept that you don't know what you're doing most of the time in investing, as crazy as that sounds. So that's why you need to be fully diversified, as you are not an investment scholar as such. So you need to have a diversification because it is a protection against ignorance in a way. So a lot of people, for example, on trading 212, it's probably the first time ever investing, like myself. So you need to realize that you don't know everything. That's probably one of the main points of diversification, that it will really protect you across the board if you can diversify across different sectors. There is 11 sectors in the investment market, and they are the energy sector, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, IT, telecommunication services, utilities, and real estate. So now let's dive into my own portfolio to see what companies I have in each of these sectors. So on my Trading 212 portfolio, you can see here that I have my sectors divided up in pies. So in the communication services, we currently have 3 holdings with Facebook, Walt Disney, and AT&T. In consumer discretionary, I have 2 with Tesla and McDonald's. Consumer staples, I currently have 3 with Coke, Pepsi, and P&G. In energy, I have ExxonMobil and Chevron. I have an ETF which diversifies across the top 500 US companies, which is certainly handy to have as well for diversification. In the financials, I currently have 5, so we have Visa, MasterCard, JP Morgan Chase, Bank of America, and Goldman Sachs. We then have the healthcare sector with 3 companies, with Johnson & Johnson, AbbVie, and Pfizer. In industrials, I have 3M and Caterpillar. Materials, currently just 1, and Barrick Gold. In real estate, I have Realty Income. In the tech sector, I currently have 4, in the form of Microsoft, Amazon, Apple, and Alphabet. In the utilities, I have Waste Management, and for the purpose of this video, my YouTube pie we can ignore, but just for the purpose as well, we have 4, which are Workhorse, Virgin Galactic, Diamond Peak or Lordstown Motors, and Neon. For the purpose of my own portfolio, I don't want to have more than 5 companies per sector. Now you can see now that I have all 11 sectors in pies, and one of the reasons I have it in this format as well is, for example, you can see here that the energy sector is currently down. So let's say I was adding in money to my portfolio today, that I probably would target this sector as it's currently down, so it would help improve my dollar cost averaging. But it wouldn't make much sense, for example, if I started putting money into this pie, which is currently up nearly 6%, as this would bring up my dollar cost averaging, which you don't want. In terms of deciding how many companies is perfectly diversified is the same as asking how long is a piece of string. It's currently up to the individual themselves. Some people won't go over 5 to 10 companies as they feel that they're diluting their risk, but some people also believe that they'll go up to even 100 companies, and some just hold ETFs such as the Vanguard S&P 500, which has over 500 companies in the portfolio. Now I believe even having 500 companies is a bit conservative, so I only have a small portion of my capital in an ETF. But in my own personal opinion, I believe anywhere from 16 or 17 to 30 companies is perfectly diversified in my opinion. Under 15 companies, I think you are still open to a lot of diversification, and over 30 I feel you are diluting your stocks. So about 15 to 30 companies I believe is the best number. With everything, they have pros and cons. So 3 pros, as we can see on Investopedia, would be that it reduces portfolio risk, it hedges against market volatility, and it offers higher returns long term. Now the cons, I don't really agree with some of these, but it limits games short term, which I suppose it does. It's time consuming to manage, which I don't believe so, because you saw my own portfolio pie there, that once you actually pick the companies diversified across different sectors, there isn't much more to it. And the third one that I also don't agree with is that it incurs more transactional fees and commission. But again, as Trading 212 and other brokers as such don't charge commissions anymore, this becomes irrelevant. So with that being said, that brings the end to today's video. If you found the video helpful in any way, please consider smashing that like button. And as always, if you're new around here, please consider subscribing to this channel, as it would really help me out going forward. Also, if you have any comments, please consider commenting below and I'll get back to you as soon as possible. Thanks very much guys, and I'll see you in tomorrow's video.